2 o'clock on the 14th. So we have the FOMC here in just 1 minute. I'm going to get started with a quick risk disclaimer. We understand there's risk in trading. Please and always use trade capital only. You know the deal. Whatever you're trading, you know the risks. Let's get into the charts. I will be looking at dollar pairs right now. So I'll log into YouTube here in just a minute, say hi to everybody, but we're just getting started here with a final minute to go. We have about 30 seconds before the 2 p.m. news hits, and the plan is to see what type of volatility we have on dollar crosses. So I have the Aussie dollar, Euro dollar, Pound dollar, New Zealand dollar, dollar CAD, dollar Swiss, dollar yen. Initially, I am seeing just some pre-market movement. It is not quite 2 o'clock yet. The expectation today is that the Fed is going to raise rates by 50 basis points, bringing us up to around 4.25%, I believe. Here is the CME Fed Watch tool. Yep, so 50 basis points brings us up to 4.25 to 4.5%. And we're going to see what happens. So initial reaction is to the downside. If we have any expectations, or we have the numbers here, so we have the press conference. Oh my gosh, they're turning this into a nice little meme for Powell. All right, let me refresh this really quickly, take a look at the technicals. If anybody has the numbers, I'm assuming it's pretty much baked in at 4.25%. I'll refresh the news. Let's refresh the calendar here, see what we have. Initial reaction, weaker, actually no, I'm sorry, stronger dollar. So Aussie dollar dropping, Euro dollar dropping, and that's about 30 to 40 pips or so. This isn't done, right? We're on the 1 minute time frame. This might be a very noisy announcement. We still have Jerome Powell's press conference at 2:30. Pound dollar dropped as well. Yep. So New Zealand dollar pulling back. All right, let's see what happens. So we're gonna wait a couple minutes. I tend not to jump in and chase. Dollar Swiss. That's all well and good, but I'm long dollar Swiss right now. I'm out of dollar yen. We took profit on pound dollar, took profit on euro dollar. Okay, so let's give it a couple minutes. It's 2:01. I'll get logged in here to the YouTube session. Say hi to everybody. All right, we're live. Yes, yes, yes. All right, Donna, how are you? Linda, hello, good afternoon. Bill, what's happening? David, Frank, Native Texan, all is well. Vermin, I see you. Ed, good afternoon. John here, audio low. Let me see if I can bump it up a little bit. Maybe it's just could be my microphone setting. It could be inside my little streaming service. Give me a second. Volume. Let's see if I testing. Yeah, we should be. I don't know. Should be okay. Let me see if I can turn it up just a little bit. We'll crank it just a little bit higher. I'm like the yellow and red decibels, so it should be high enough. Chris, hello. Scott, what's happening? Ruth Ann, good afternoon. Tom, what's happening? Mila, Brad, Jerry, nice to see everybody. Okay. So here we go. First reaction is a stronger dollar. Let's take a look at these charts. The initial move is to the downside. We've had about 3 minutes of dollar strength. Not a surprise we're getting some pullbacks. What I'm going to be looking for is how quickly can we see some activity on the Masterflex system. So as an example, I talked about this yesterday during the CPI news. We have this sell zone created. I'm looking to see if my ribbons can fall into place. If we have price, pulling back into the ribbons and then continuing lower, that's the trade I look for today. If we just continue to flush down, I mean, I really wish there was a bigger breakout pocket. Like CPI news yesterday left these like 70, 80, 90 pip pockets. And so, the reality is we might just come back to test some of those today. So let me have a quick peek at the dollar basket. We'll look at the higher time frames as well. So here's the 1 hour chart. Let's have a look at yesterday's. This is what I was considering is, does everyone see here how yesterday's CPI announcement, this is the movement. So there's your CPI announcement. Spend the rest of the day just kind of fading. We could be looking to pull back into that pocket from yesterday. All right. So again, it's kind of a wishy-washy scenario technically, but if we have equal lows, then possibly we pop back up to these highs. If we're going to come back and fill this pocket from yesterday, we could see some stronger dollar movement. I also was looking at the DXY. We talked about this on Monday during the session. I was looking at the DXY to possibly go down to 103. So we're seeing a little bit of hesitation down near these levels, 103.15, 10300. I was looking for a bit of a pullback to come pretty soon on the dollar. Could be something like this. We break that structure there. We look for some upside potential. Past resistance becoming support. Dollar shows a little bit of a correction. We'll find out more here in the next little bit from Powell, what the press conference reveals, if anything. But here's what I'm going to look for. The fact we're getting a bit of a pullback, this is what I'd like to see. Let's say that we pull back. Well, we have structure right in here. So if we can pull back and find resistance, we could sell that to retest the low. Volatility-wise, it's looking about 20 to 30 pips on this Aussie dollar. And I guess I'm just kind of thinking out loud here. It's like, I could just, hey, we're red, let's sell. It's like, we could. I mean, we see red. The difference, of course, would be if I sell it right now. If it turns green on me, I've got to stop out. And right now, that'd be about a 35 to 40 pip risk. So I'm looking for a little bit more precision. I'd like to be a little bit more patient with a move like this, just to see. This does stretch about an hour, right? We have the news right now that the market's digesting very quickly. We have the press conference coming in about 25 minutes. And typically, the hour ends up being very volatile. Whether it's all in one direction or we have kind of a counter trend move, we'll figure it out. Okay. All right. Good stuff. Okay, so I'm going to keep an eye on that one. So that's Aussie dollar. DXY possibly pushing just a little bit lower. Let me see if I can set a chart alarm here. That's 103.53. This will be back to the lows on the DXY. And trend line hasn't broken. I don't think we're going to break that trend line today. We'll see what happens. But I think just a little bit more downside here. Market's been, pricing a lot of stuff on the Fed. We've had some shifts in the Fed watch tool today. I think it was, so let's see the official news. Official news is, wait a smidge. Wait, I think that's right. So I think that did come in at 4.25 to 4.5. As expected. Yes. Let's go to Forex Factory, refresh this. Yep, came in as expected. So 4.5. Now, they do this on the high end, which is kind of misleading. Because if you go to this Fed watch tool, does everyone see here on the watch tool that we're currently sitting at 3.75 to 4% currently? And so to bump it up to 4.25 to 4.5, that is a 0.5% increase. So that 0.5% translates into 50 basis points. That is pretty much what the market expected. There's the highest probability of it, and it did deliver. Okay, yep. So that was expected. And tomorrow we have the Swiss National Bank. They're expected to raise rates by 50 basis points, or another 0.5%. The Great British Pound of the Bank of England expected to do the same thing. The ECB expected to do the same thing. So a lot of central banks kind of going on this last rate decision for the year at another 50 points. And going into next year, if we go to the February meeting for the Fed, I was going to say that better shift. They're looking at a 25. I think I read this morning. This group I subscribe to, Data Trek, they were talking about 50. Okay, 50 for this month, 25 for the month of February, and 25 for the month of March. So 50 basis points, 25 basis points, 25 basis points, which added up, that puts us at 1% higher. Okay, so 1% higher from essentially a 4% interest rate, which is where we're sitting at right now. We add that puts us pretty much at a peak funds rate around 5%. Right, the market has been anticipating this for the entire year. We've priced in a few times. There's been a shift into higher rates, but we have been expecting a 5% rate pretty much all year. All right, let me go back to the charts here. We're getting some follow through. That's what I'm talking about. It's like man, it's so hard to freaking chase that. Give me a pullback. And even, I like to trade it this way. There's a fib. Okay, shallow pullback. I'm not chasing that. But again, obviously, I'm the one standing on the sidelines, so I'm missing out. There's a few pips up for grabs. 68.40 to 68.20. We're already showing 20 pips of movement there on the Aussie dollar. A little pullback here. This one should have been a nice little spot. Possibly if that spike is true, somewhere like that. Let me see. right there. High to low. I mean, the euro dollar did the same thing yesterday. We had that 382 pullback. Let me take a look at the currency strength charts. I'll wait till 210, get a little 5-minute update, and I'll check the currency strength chart and see if it's noticeable between, one currency that we can possibly see as the strongest versus the weakest. Market seems stunned. I don't know about stunned. I would say that the market just seems complacent with, or satisfied rather, of like what was expected. So there's really no surprise, right? I think that could be the difference, is the market's not surprised. Yesterday's CPI, that was a surprise. The forecast was like 7.3 and it came in 7.1. So it was quite a pleasant surprise. The markets rallied and gapped like futures was crazy yesterday. We had a huge gap to the upside, and the market spent the entire day fading that gap. So going into today's trading, Wall Street's been a little bit on its heels, just waiting for this Fed rate decision. All right, CAD Swiss popping up a little bit. Pound CAD sideways. Aussie New Zealand popping up a little bit. Let's go. Let's go. Okay, so probably should have jumped into a little sell trade there on that dollar. This would have been a good spot right here at that 38%. Be around 106.47, up about 13, 14 pips right now. Pretty tight to that stop loss. Let's have a look at the pound US dollar. Pound US dollar, again, not really much of a pullback. High to low, it's just shy of that 38%, right back down to the lows. Man, it's not much, but it's such a quick trade. 92 down to 65, about 25 pips. New Zealand dollar, pretty shallow pullback here. High to low. Man, this feels an awful lot like the move yesterday. We would have been forced to make a decision about the first 5 or 6 minutes to place our trades. That's not always easy. And again, we still have lots of time. Powell's press conference at 2:30. So I think what I'm going to look at doing is just kind of hanging out for a second, not forcing any trades, and just waiting to see, all right, well, if we have some better flow, is it easy to follow? Sometimes we get a nice aggressive half-hour push when Powell starts talking. And sometimes that push is, I mean, let's say this. For the next 15, 20 minutes, if not much is happening, we might just chill out and wait, right? We have the initial knee-jerk reaction. Price stays here pretty contained for the next maybe 20 minutes or so. If it breaks higher, if it breaks lower, we look to follow along with some of that price action. Okay, New Zealand CAD falling. That's very good. We also have a nice bar count on that New Zealand CAD. Yes, indeed. That's good. Yep, I'm up about 60 pips on my New Zealand CAD position, so I'm happy with that. And hopefully there's more to go. If I can get that trade, I'm looking for a level, in the near term, I'm looking for a spot around 86.60. Here's New Zealand CAD for a moment. We'll come back to those dollar pairs. So New Zealand CAD I shorted this week. We're just shy of the yearly pivot. We have a weekly pivot this week. That's around 86.83. We have a 1-hour bar count that I'm really interested in trading back down towards. Also, I just sent out the video update today around like 11:30 or 12 o'clock Eastern time. And having this low, having this high, I'm just looking for a currency pair like this to offer a bit of a pullback. So I'm trying to fade this move with some high bar counts and pockets and pivots and stuff. So yep, it's looking pretty good so far. Hopefully this gets us down into profit, today, tomorrow, and I can lock this one up and move on to the next trade. Good stuff on that. Thanks for pointing that one out there, Linda, for New Zealand CAD. All right, so like I said, I'm just gonna sit tight right now in some of these dollar pairs. So what we might see here, I'm just looking at euro dollar pulling back. We have ribbons. Okay, so what we could see is this: if we pull back into the ribbon and then we push bearish again, maybe looking at a quick trade stop above the ribbons, try to target the low. I suppose if it turns, it's going to be interesting if it turns green. If it turns green and stays green, we could do a quick buy trade too and try to see if we take out those highs. So, I mean, like I said, DXY, like I said on Monday, I do think that the DXY has more downside potential. Euro Swiss still sideways. I'm just scoping out my MT4 charts. All right, so keep an eye on that. So a little bit of indecision going on right now in the 1 minute time frame. Let's take a look at some other crosses. So Aussie dollar just chilling out with a little pullback. Maybe some ribbon resistance here that we can keep an eye out for. Euro dollar, same thing here, looking for some ribbon resistance right now. Pound dollar, I'll get rid of this fib. Okay, look for some ribbon resistance here, right around 2390 to 2400. Well, I posted it in Telegram. Yep, I posted that in Telegram for the Flex Trading Room channel and Equities on Demand channel. So if you have either of those two classes, it should just be posted right in the thread. There is Equities on Demand. There's the direct play link, and then here's the Flex Trading Room direct play link if you're in the Master Flex class. Somebody posted a Pockets video from me, but here's my video update I did earlier today. 12:15 is when the video is processed and posted. Yep. Yeah, sure thing. Okay, let's go to the Kiwi dollar. Get rid of my fib here for a second. Well, I suppose it looks like, so it's 215. Take the currency strength chart. If we have dollar strength, so we have the dollar getting a nice little jump to the upside. Swiss is the strongest currency of the day. The Kiwi is the weakest. Aussie second. CAD is, I'm trying to find, oh, the CAD is right there. I thought it looked like a big spike to the upside, but CAD and Aussie are right here. Dollar has been surging to the upside. We have our Kiwi to the downside right now. Swiss is still strong. Euro has jumped up with the dollar. The yen is spiked down. Pound's pretty flat. So it's a bit of a mess right now. But it looks like, New Zealand dollar could be a pretty good short just based on what I'm seeing with the currency strength chart. So we could look for something like this. Either, I mean, we could take a chance of selling it now. Stop loss in this area. If it turns green, I would get out of the trade. If we're right on the trade and it was New Zealand dollar weakness, then, or I should say just dollar strength, New Zealand weakness, then we're looking for some fresh lows. Volatility wise, this is not a ton of movement. I mean, that's 50 pips. So before we make any crazy decisions here, let's just have a quick peek at the dollar basket. So because we had CPI news yesterday, go to the 1 hour time frame. There might be just some very quick pocket trading, right? So yesterday's breakout on CPI, pull back into that equal low. I don't know. It's a tough decision for right now. I see us holding some support here. We have these highs. Dollar could potentially get a little bit stronger into there, but this like I said, it's not a huge surprise. The market did expect the 50 basis points, and they delivered on it. So pretty much as expected. Euro dollar. Think about this. We have a daily pivot available. We have the CPI pocket from yesterday. Let me use a straight line here. So we have this area, this area. We could see some dollar strength, but I'm just gonna wait. Also I've traded many of these FOMC announcements. Sometimes the best thing to do during an FOMC announcement, especially when the market's not really surprised by it, is to wait for the hour to be done. So I mean, even though we have the press conference coming up in 12 minutes, if our hour candle looks like this, there's really not a good trade in there. The best trade would be if price comes back up to the same high during that news event and then pushes down, you have a tight stop loss, a way to fade that. If price comes down to the low and bounces there, then you can put a trade in, stop loss below, and go after a nice little scalp. Right? So anyway, I'm going to assess. But sometimes the old FOMC is pretty wild just because it doesn't really make any direction. We just have a lot of noise in the hour that we trade it. Right? So New Zealand dollar is kind of still stuck right now. This wouldn't be a bad play now that we see this with our Master Flex. See that we have bullish on the Heikin-Ashi. That's a good sign because that gives us a chance if this is high to low. If we're going to have a pullback here, if we get red to line up again, we can go after some fresh lows on this New Zealand dollar. So if it stays, blue on the Heikin-Ashi, then we wait. If it turns red, we can look at a sell trade, stop above the ribbon, pretty tight stop in that Kiwi dollar. Okay. So let's see what we have. If I get a close below the Heikin-Ashi, I might look at a quick sell trade. On the Aussie dollar, same thing. If we get a quick confirmation, I might look at a sell trade. The Euro dollar, same thing here. We're bullish on the Heikin-Ashi. If we get a sell confirmation with that and everything realigns, I might look at a sell trade. Yeah, so this is good. This is better structure than what we had yesterday. Yesterday felt like we had to chase, right? We had to chase the market yesterday during CPI to catch any pips. Some did, right? A lot of traders were up 50 pips or 100 pips, and they just jumped in after a couple of minutes, and it still continued to flow through the morning. So that worked out pretty well. But I wasn't chasing yesterday during the live session. All right, New Zealand CAD's working out nicely. I'm happy to see that moving. Pound CAD is working its way back down. Hopefully, CAD Swiss starting to work its way back up. Swiss yen still stubbornly up. Aussie New Zealand is moving higher. That's good. So I closed out one of my positions on Aussie New Zealand for about 90 pips yesterday, and then I've got another trade that's up about 20 pips right now, and still looking to hang on to it a little bit longer. Okay. The 1 hour input, yeah. Let's see here. PK, you talking to me? Just looking at the 1 hour structure. So pocket stuff on the 1 hour chart. Let's go to the other time frames. Pound US dollar. There's our CPI from yesterday. So if the market is trying to come back and find some efficiency, it might be right in here. Market come back. Use a wrong button. Yep. So if we go to this area, let me use the shift key. So this area, possibly a little bit more of dollar strength into that efficiency zone. Okay, futures are down now. All right. What else? New Zealand US dollar. So there's your CPI versus your FOMC. Right? Here's your CPI news from yesterday. Here's your FOMC. What did the market do? Pretty much gave us a big nothing burger for the last 48 hours, right? CPI is up, FOMC is down, and we're right back where we started. So that's a pretty tough trade. As far as like where do we go from here, it's like the market has been making higher highs and higher lows. Could we put in a bit of a capitulation top there? Maybe. I would look for some dollar strength to push. So let me go back to the charts here, see if these are lining up. I'm going to take, let's see, if I get a confirmation, I might look at a quick sell trade on the dollar basket. It's 222. All right, I'm going to take a quick sell trade. So Aussie dollar, I'm going to look for a quick sell trade. Again, I'll be quick to adjust these, but I'm going to take a quick sell trade. Same thing here. This is euro dollar quick sell trade. So in the minute, we should get some confirmation. Here is pound dollar. I'll take a small trade there. And I'm going to monitor this. If I get stopped out, fine. I'm just going to get out really quickly, but I'll also consider if I like another setup here, New Zealand dollar. Let me set a sell stop here at 64.14. All right, so I'll get a sell stop going on 64.14. I'll put this in my broker platform. This is not just a market order. I have the one-click trading ready to go. So 64.14 pending stop sell. Okay, that is the New Zealand US dollar. Dollar CAD. Dollar CAD, if we get back above, see how the little Heikin-Ashi is red? If we get back above our ribbons and go blue, I think dollar CAD looks pretty good to the upside. Let me see if that one confirms. And then dollar Swiss, I'm already long, so I don't really have to do anything here to add to it. I'm just going to hold tight. I think I added a trade yesterday on dollar Swiss. Let me confirm that. I did not. Well, that was silly. So the 4 hour time frame has a pretty good bar count. Anything that I want to add at this time? Not quite. I still have pending orders around 9,100 and 9,000 on the dollar Swiss. However, we do have some really ridiculous obvious pockets to the upside between like 96 and 9,800 that eventually I'll just look to build towards. Okay, so let's have a look. So the black line represents a little, order below, and all I was looking for here is master flex. If we go from bullish Hekinashi back to bearish, I'm going to take that trade. And my goal is to get this thing into some fresh lows, a stop loss that would just really be a visual stop loss up above my ribbon. If I get into some fresh lows, I'm going to put a stop loss to break even. Okay, so I'm short on the Aussie dollar, short on the euro dollar. Again, watching these ribbons pretty closely. Short on the pound dollar, and short on. Oops, no, don't close that. And then short on the Kiwi dollar. All right, that Kiwi dollar's fallen nicely, which I'm not unhappy about at all. Hopefully that has more to fall. Dollar yen. Is this a trade? Dollar yen. Probably filling the pocket from yesterday. So, yep. Yeah, that would have been a pretty easy trade, man. Back to equal lows, 134. That's 100 pips on the dollar yen right now. So we have room. If we go long dollar yen, even on the 1 minute time frame, there's room back to this daily pivot. There's room back to this, big pocket from yesterday. So we could see, dollar yen certainly chew up some of that, getting all the way to 136.50, 137. So I'm going to look for a dollar yen long position right now. Also, that daily pivot sitting around 136.06. So daily pivot plus we have our pocket around 137.20. Set a couple chart alarms there. Okay. And dollar yen. Let's see, low to high, a little pullback. I'm going to take a stab at this one. Okay, I'm going to go long dollar yen. I'll monitor my colors in here with Master Flex. Kiwi dollar will fall more. I mean, the Kiwi is right now it's showing us that it's the weakest currency, right? That's part of the reason I don't mind exploiting some of the New Zealand dollar. So I'm short New Zealand CAD. I'm short New Zealand dollar right now. I'm also long Aussie New Zealand. So I mean, I'm still looking for the Kiwi get a little bit softer versus all the currency pairs I just mentioned. Yep. Okay. So dollar yen, take a little long position right there. Dollar CAD, I'll just stand aside on. But I have, let's see, dollar Swiss, I already have long position, so there's nothing I want to add on this one per se. Although it may not be a bad spot to add. I mean, it's been beat down pretty badly. I'm still looking to add to it lower, like 91 or 9,000. But I'll take the trades I'm in right now. I'll have that's just 1, 2, 3, 4, and 5 positions. So I have 5 positions right now. They're favoring dollar strength. So I'm short Aussie dollar. Let me use a thicker arrow here. So I am short. Let me use this line. Short Aussie dollar. I'm short euro dollar. I'm short pound dollar. I'm short New Zealand dollar, and I'm long dollar yen. Where's my mouse? There. So those are the directions that I'm trading right now. All right. We got the press conference starting in 2 minutes. We can look at financialjuice.com, see what the statement reads, see if there's something the market's digesting headline wise. I would imagine that not much is going to change from Powell's language. I know that the market might be excited about the CPI data. We have basically 2 important prints that have shown, data is improving, things are looking better. But lessons to be taken away from the 70s and the 80s, really from like early 70s into 1981. Inflation did not just go away right away. Inflation lasted for a year and a half. I don't think we really realized that inflation was a problem until Q1 of this year. So probably in April is the first time where it's like, oh yeah, this inflation is really here to stay. We kept printing higher and higher numbers. And it's not just CPI, but it's PCE, it's employment numbers, it's producer price index, right? You have all these different features that are giving us some information on what to do with inflation. All right. So let's have a look. Like I said, the trade sizes I took are all pretty small. So I did a this is a point, so point one. All these are point ones. So if I lose on these, again, if I lose and I decide to switch directions, then I will close out and then look for my alignments. If I want to just close and reverse, they'll probably take a point two and just increase the trade size and see if I can gather some momentum on the next trade. So let's say that I lose 20 pips. Well, if I increase the trade size to 0.2, I need to make 10 pips back to get to break even. So if I can find some direction, that shouldn't be a problem to make some money. Linda says the best to use manual trade. I mean, yes and no. I think the manual positions for me, it just helps me stay a little bit more in tune with not chasing the market, letting the news kind of come in, digest, not be faked into the news. I mean, if you think about it, it's like if you have the robot running, here's what I wouldn't want to do. I don't want to have the robot running prior to the news. Okay. I mean, if the news comes out and it's down and you turn on the robot, sure, you could take a sell trade, in one of these two spots. But you're just sitting here. Obviously you're hoping it goes lower like yesterday, easy, right? Yesterday, robot comes in, everything's aligned red, and it takes a sell trade and the market pushes another 50, 60 pips lower. I mean, that's an excellent trade. The robot can certainly help, but I tend to look at just kind of my tried and true price action based trades, which is, I'll let the news react. I'll give it 5, 10, 15 minutes. I'll make an assessment on structure. Like right now, it looks like we're just going sideways. So I think the next move is, do we break this way? Right. I mean, it's 2:31. The press conference is underway, so we're going to see if something's happening where it's weaker dollar. Right. I mean, if this quickly turns green, I'm probably going to bail, switch positions, and start going the other way. So let's have a quick look. I'm going to zoom in on all these charts, and just to make sure I can kind of keep this monitored in case I have to reverse positions. All right. So we're watching closely. Any major headlines out of the press conference yet? Dollar yen is still pushing a little bit higher, so this one's actually so far so good on the dollar yen. We're sitting up about 5 or 6 pips. Okay, see if we can poke those highs. All right, so nothing yet. No colors yet. So I'll just chill. Let's check the calendar. So I'll move this up and out of the way so I can just read the comments coming in. Fed swaps upgrade 50 basis point for February, so that's change. We were looking at a 25 hike, now it's 50. So lots of news coming in here. Median view of Fed funds rate, longer run 2.5%. Futures pricing a 61% chance of a 25 basis points hike in the next meeting, down from 72%. Maybe that's changing, but we'll take a look. Fed funds rate end of 2025, 3.1%. Median view of the funds rate end of 2024, 4.1%. PCE inflation at 3.1 in 2023, which is 0.3% higher. 2.5 in 2024, 2.1 in 2025. Wow. Well, PCE inflation is like, oh yeah, we'll probably just solve this inflation, eradicate this inflation in 3 years. No big deal. Sure, that's going to be fun for everybody. We're like so scared and tentative about having the recession conversation, the recession reality. I mean, look, there should be a contraction. Companies should probably, it's not fun to do it, but it's something that's necessary. When we have an economic slowdown, companies start to cut jobs. They start to scale back. They start to soften up their forecasts. We've been seeing that quite a bit, but we really haven't had the job losses as you would expect. Okay. So anyway, just reading some of these comments here. PC inflation, U.S. jobless rate at 4.6 end of 2023. Rate futures in the U.S. traded at terminal rate 4.9, up from 4.8. Press conference underway. 50 basis points for February. That's a jump up about 25 points. Fed swap rates for 2023 edge higher. We've covered a lot of ground, but the full impact of tightening is yet to be felt. That's pretty hawkish from Powell. We still have to do work. This is what I said on Monday. I don't think there's anything that's going to come out of Powell's mouth that's going to change. Okay, there we go. So now we're finally starting to get some movement, yeah? So Aussie dollar down, euro dollar down. We're going to start looking at some basket profits now. Let's run with this. Let's see this Hekinashi. Here we go. Okay, so dollar yen pushing higher. This is what we wanted. This is what we wanted. All right, good. Now we're going to start to see some flow. Okay, Papa Powell getting the markets going. So currently sitting up around 10, 15 pips. Currently up about 20 pips on the euro dollar. Okay, good. Currently up about 25 pips on the pound. All right. I mean, we're not done yet. I think what I'm going to do very quickly here, I'm going to move stop losses to break even. I'll move break even on the pound. I'm up about 30 pips on the pound. I'll go break even there. Kiwi, I'll let it run. Euro, I'm up 20 pips. I'll go break even there. Dollar yen, we're sitting here at 88. We're in around 60. Break even is going to be tight, but I'll go break even there. So I'm going to eliminate some of the risk on the pound, the yen, the euro. We're going to see if we can keep flushing a little bit lower. Okay. Let's see here. Anything else? Labor market remains extremely constrained. Higher interest rates are also weighing on business fixed income or fixed investment. U.S. economy has slowed significantly since last year. Anticipated ongoing rates will be necessary to become sufficiently restrictive. We still have work to do. You know, this is what I said on Monday. It's like there's nothing about the statement or the press conference that should indicate that Powell's going to soften his stance. And he's not. And the reason why is it's like the market is so quick to just go nuts to the upside like it has been since October. I mean, the S&P is up 17% since the low in October. You know, and I know that the Fed does not want to see that happen. You know, I mean, the Fed still has to be very strong in the language without going crazy and raising by 75 basis points or 1%. It's like they'll try to keep it at 25 to 50, but be consistent to try to keep that restrictive language, you know, just in the markets. I mean, it's just going to echo. So anyway, so far so good. Dollar strength is our direction. It was a pretty straightforward trade after some consolidation, and you know, we have a lot of those CPI pockets from yesterday getting filled, right? So let's see how it takes place. Labor market out of balance. Yeah, I know that. I mean, it's are you just pulling comments there, Tarek? I mean, I'm on Financial Juice. I'm looking at the same thing. So, you know, where the funds rate is supposed to be, we have end of 2023, 5.1% versus 4.6. That's a big difference. Here's Powell comments. We require significantly more evidence for lower inflation. Inflation expectations remain stable. Risks are skewed to the upside. Monthly rate of inflation has slowed. January futures settle. Although job vacancies are down from early year, the labor market remains unbalanced. Yep. So, look, this is pretty solid so far. We're getting a nice push. Hopefully, we will stay there. So 27 down to 19. We had lows around 11. I think what we look for here is let's just follow some of this Hekinashi. You know, if it stays, you know, red, let's follow the Hekinashi to the downside. Let me change the color. So if we see the Hekinashi stay red and price pushes lower, this entry, I'm just going to try to manage it all the way down to profit, right? Try to stay with dollar strength, try to stay with the Hekinashi. If collectively we're up, you know, a couple hundred pips or 100 pips, I mean, I might look at taking some profit. So I'm just going to kind of monitor the red Hekinashis right now on the sell side and the blue Hekinashis on the buy side. So my dollar yen's bullish. The dollar Swiss, it's fine. I'm already long, but everything else, I'll just watch the Hekinashis. Okay, good. Angela picking up 35 pips. Fantastic. Forex Factory. Okay, that's where you're getting it from. Where's that print, by the way? Is it just popping in here? Where's news? Oh, okay. News in here. Comments. Yeah, the website that I like is financialjuice.com. I use this website quite a bit. This one comes in with pretty much any different media outlet, and will just pop up headline news. So it's pretty cool. What else? Inflation expectations stable. We require significantly more evidence of lower inflation. No reason to be complacent. Financial conditions fluctuate in the short term, but it's important to note that they reflect policy restraint over time. We're seeing effects of demand or on demand in interest rate sensitive sectors, but it'll take time for the rest of the economy to catch up. 50 basis points is still a historically large increase. There's some ways to go. Okay, so again, what are we doing? Price is cooperating. We follow Master Flex, pretty straightforward colors. You know, we had red alignments. We waited for our Hekinashis to go from blue to red. We jumped in, took a stab. Obviously, I'm not trading the entire basket, but so far so good. And we're up some profit. So let's see here. Up about 15 pips. Up about 15 to 20 pips. I'll just say 15, so that's 30 pips total. This one's up about 25, so that's 55 pips total. This one's up about 5 pips, so 50 some pips total. And then dollar yen is up around 30 pips. So, I mean, I'm closing in about 90 pips on the day so far. Little cash grab from dollar crosses. Linda says, I wish that Kanashi was a different color. I mean, I get it. I mean, it is it's, I mean, if you zoom in, it's not like bright red like the candles. It is like a slightly translucent red. And I follow it this way because, you know, I see it's slightly shaded differently. And I just, you know, I know that it goes from blue back to red. So, I mean, sorry if it's not hard to determine, but, you know, we said it was red. So we went from blue to red. This is what we wanted to see, right? So we go from blue to red. There's my trade. And now we're getting the price going our way. So now this Hekinashi is just, I'm essentially saying I'm not going to have a stop loss up here. I'm going to keep the stop loss trailing on these Hekinashis and try to get this as tight to price as possible. Okay. All right, we got the pound CAD cooperating a little bit, which is nice to see. CAD Swiss cooperating, which is nice to see. New Zealand CAD cooperating, which is great. Aussie New Zealand is heading to the upside. So those trades that I took last week and this week, I'm liking quite a bit. I'm going to continue to monitor this New Zealand CAD. That one's probably the closest to my take profit right now. You got to be kidding me, bro. All right, well, break even on Aussie dollar, break even on euro. Oh, fudge. Well, that was sucky. Dollar yen is still in profit. These all got stopped out for real. Jeez, oh Pete, man. I don't think we're done though. Yeah, I mean that to me is fudge. That sucks. Sitting there at 90 to 100 pips of profit and just now it's over. Well, that was quick. Dollar yen is still fine. I mean, I'm not gonna lie. I think that we have this pull back here, pull back here, pull back here, pull back here, pull back here. I mean, I still think there's gonna be some dollar strength. So if you didn't get stopped out, hold tight. Okay, let's see if we can crack some lows. Projections not the plan. There's no certainty about the economy. Our decisions will be based on the totality of incoming data. The Fed is taking forceful measures to moderate demand. We know that. Historical record strongly warns against premature loosening. Again, pretty hawkish comments from Powell. Focus not on short-term changes to financial conditions, but long-term trends. We've not reached sufficiently restrictive policy stance, which means there's more to raise. Again, hawkish from Powell. I'd also point to projections project. Fed policymakers are the most accurate predictor. Really? Yeah. So, look, I think we're going to see some more dollar strength. I say stay with it. Yep, I say stay with it. So let's follow our Hekinashis. If price continues to push lower and our Hekinashis stay red, we stay with the trade. The only way that I would exit, if you did not put a stop, oh, like right there, I was just say if this turns green, then it might be something we want to just get the heck out of the trade. But it hasn't turned yet. But look, there's going to be some flow here. I got stopped out at break even. Okay. So I'm clearly not able to show much on this for the winning side, but we're getting a big reversal right now in dollar pushes. So at 245, we'll have a real-time strength. This hasn't closed yet. This hasn't closed yet. I know it's tempting, but here's what I'm going to do. I got stopped out at break even. I can keep the trade size the same because I didn't take any losses, but I'm going to jump in and take a buy trade. Okay, I'm going to switch gears here and just, it feels like I'm chasing, but I'm looking to buy. Okay, same thing here. So I'm obviously a little bit late to this one, but I'm just going to do some one-click trading on mine. So give me a second here, and I'll put the lines on where I'm getting in. So I'm switching directions on pound dollar right here. Okay, hopefully this isn't just a noisy chase. Oh my gosh, come on, dude. This is a little wild. Dollar yen, that was a big drop right there. Look at this thing. All right, let's give it a chance. So this is pretty messy. I mean, just in the last 5 minutes, it's got pretty messy. So let's see what happens. Now, if I'm back in with a 0.10, and let's say that this comes back and turns red, I will probably close out this trade, go with a 0.2, and hope to go to the downside. All right, so I'm going to use a little bit of trade size fluctuation to see if I can just follow this trade and manage some pips. Obviously in hindsight, I wish at 90 pips I would have just moved my stop losses to protect 50 of them, and I probably wouldn't even be trading right now. I'd be done. But I didn't. But we clearly have some noise going on. Yep, Tarek, I see that too. Yep, a lot of noise right now. And when it's all said and done, if we trade for the next 15 minutes and this hour is done, guess what it's going to look like? What did I say in the first 5 minutes? Sometimes the FOMC does this, where your candles, here's your high, here's your low, here's your close, right? And nothing happens. A lot of volatility, but no actual direction. Sometimes those are the most frustrating news announcements. All right, here you go. I can't promise that we won't raise our peak rate estimate at the future meeting. Oh, geez. I'm telling you, like this is pretty darn bullish on, or not bullish, but hawkish rather on Powell's part. Also, I just saw here that Brent crude futures settle at 82.7 a barrel. That's a big jump on oil. So, SPY is down right now. We're down to 398. Qs are down. We're down to 285. That big gap got filled yesterday, which is not a surprise at all. The VIX is well off the lows. Take a look at oil. Oil is up to 77.39. We've had a 10+% move over the last couple of days. We're up 10.5% on oil. So that's 3 straight days of oil bulls. We're going to see, I talked about this $70 area offering some support. It's right there. So if it pops back up here into, I don't know, does it have room to run to 80 plus? Maybe up to 90? Maybe. Okay. SPY unhit daily pivot. All right. Yeah, pretty noisy. Non-housing related services inflation will take a long time to fail. Okay. So this is overall, I'd say this is pretty hawkish. So price action is pretty noisy. Powell's pretty hawkish, but this is also what I said on Monday. Regardless of what the CPI did, CPI obviously was a nice surprise. The market loved it for the day, but I'm not surprised that Powell's comments and commentary and statement is what it is right here, which is they don't want to give away any clue that they're willing to soften rates or they're willing to slow down this rate hike cycle. Because if they do that, if this market rips, they're just going to stoke inflation all over again. So when they say something, lessons learned, something about like, what was it? Premature loosening. That's what was the historical record strongly warns against premature loosening. I mean, we've done it far too often, right? I mean, Janet Yellen did it in 2019. We had that terrible sell-off at the end of 2018 after a 4 rate hike cycle, and 2019 we completely backpedaled. So I mean, when the Fed does that crap, it's not good, and we're doing it now with a higher inflation environment. So I just think that the Fed has to stay firm on their language, and they will, and they'll get all the free mileage out of it, and we'll see if the market forces just kind of take things over. Oil bullish CAD. I mean, I'm looking for it. I'm looking for the CAD to follow through with some strength. I mean, if oil's up 10%, I'd like to see the CAD get some of that love. So, and technically speaking, I mean, the CAD pairs have some great setups. I mean, New Zealand CAD short to me is a great setup technically. The pound CAD's dropping pretty nicely. Let me see here. We're at 582 on that pound CAD. I probably could I could just, I mean, the pound rate decision is tomorrow. Let's see here. I could, so I think I'm going to move this up. So 70, yep. All right, 7,000, 7,200 on that pound. CAD, 4 hour, 1 hour. Yeah. Okay. All right. So let's see what we have. Let's check where we're at on some of these reversals. So break even was a really lousy result considering I was up 90 plus pips, but it is what it is. Aussie dollars back to break even. Euro dollar just off of break even. Pound dollar just a couple pips positive. Kiwi dollar just off of break even or at break even. Not in dollar CAD, not in dollar Swiss, and dollar yen turned red. This one's back to break even. So not much going on, but let's see if we get some follow through. Hopefully this isn't going to switch directions again. If it's already flipped green, hopefully it stays green. So we'll trade for another 5-10 minutes. We'll see how the hour closes, and we'll make an assessment from there. Okay. KW says attempt to join the trial for the flex room did not process. Where did you get the link for that trial? Did you get that from educational specialist? Or did you get that from my my description? There might be a way to check it out through my website, pulverreport.com. Pulverreport.com. Where is it? There we go. So there's a newsletter. If you go to systems and then trading rooms, did you join it through here? So if that's not working, tried. It said successful, but smart trader cannot see the purchase. Okay. One, you could do this. You could do try this email. I'm going to type in the chat. You can do cs@markettraders.com. Okay, that's customer service. Our rep will handle that. So if you ask for I'm looking for a trial price for the flex trading room for Chris Pulver, they can hook you up with that. Whatever, $27, something like that for the trial for the first month. Okay. All right. Well, the reality is, if we are sitting here for another 8 minutes and this is just kind of staring at me, I don't know. I might just be willing to kind of walk away with a small, maybe a win, maybe a loss, maybe a break-even result. Knowing that I certainly had some pips in my mitts. I just let them slip through. Break-even was fine. The 90 pips would have been better, but yeah, it is what it is. We'll find out. So right now, I mean, I'll just follow the colors and alignments, but it doesn't look like we're going to get much follow through either direction. We would have expected faster progress on inflation by now. Well, I mean, it doesn't help when you put $6 trillion into the economy there, jerk. I mean, inflation just doesn't go away, especially when people have demand. People are still willing to buy stuff. People are still willing to, spend money and spend money they don't have. It's like we're at 40-year lows at savings rates. We're at crazy highs on, everyone's credit utilization. So, I mean, people are just trying to spend their way through it and not really think about it. The old YOLO versus FOMO. But yeah, overall, I mean, the tone to me is this is definitely a more hawkish tone from Powell. Okay, so let's just take a quick glance here. We got a few minutes before we'll wrap up. So Aussie dollar's up a few pips, about 9 or 10 pips on that one. Euro dollar is up about 7 or 8 pips. Pound dollar's up around 10 pips. Okay, all right, we got something to show for it. The Kiwi dollar's just above break even. The dollar yen is slightly in profit by around 10 pips. I mean, we're not walking away empty-handed. We probably have 30, 40 pips right now sitting here with maybe some follow through. And the hard part is, I essentially took nothing from the first run where I had, 90 plus pips, and here I am staring at 30 to 40 pips. I'm like, ooh, do I close it? I can just take the 30, 40 pips, but I think what I'm going to look to do is, I'll try this. I'll try to go break even or better and let it run. And again, the risk for me is if it hits me at break even, there's no win, there's no loss, but that's fine. If I put my stop loss down here, then I'm still embracing some risk. So I think I'm just going to go break even or better and see if we'll just get some continuation to the upside. Hopefully it's smooth. If it stops me out at break even, then it just wasn't meant to be. Yep. It's true. That's a good point. Jerry says they're buying thinking they'll get a better price down the line, or they won't get a better price down the line. I mean, that is true, but look, it's pretty finite, right? I mean, you can only buy so long. If you're depleting your savings and you're borrowing like crazy, that only lasts so long. And concern for the U.S. is that 70% of our GDP is consumerism. So all of a sudden, people are strapped for cash, or they can't afford to buy stuff. We're still, I mean, we're staring down a recession, or we're certainly staring down a contraction going into 2023. I don't know how we can somehow like maneuver our way through and say like, well, everything looks great in 2023. I think the first half of 2023 is going to be pretty terrible. Maybe not so much bearishness, but I just think it's going to be stuck. It's going to be hard to convince the markets to like rally again. Volatility might shrivel up a little bit. We might go into more fixed income. So anyway, we'll find out. Yep, but no, you're right. People be crazy. I think since 2020, that's been pretty safe to say. People got a lot of crazy stuff going on in their heads. All right, a few more minutes here. So I think I'm going to put in, so I'm up about 13, 14 pips right now. A break even wouldn't be terrible. This one's up around 10 pips, so 20 some pips of profit, plus another 20. I mean, pound dollar is decent. This is 15, 20 pips of profit. So that's about 30 pips plus. Kiwi is my laggy. It's up about 5 pips. My dollar yen is doing better. This one's decent. 50 to 20. So that's about 25, 30 pips. All right. I think I just want to take the profit. I'm up about 60 pips net right now. I'm going to start closing trades down, and I'll just take the profit. Close the dollar yen, close pound dollar, close New Zealand dollar, close euro dollar, close all. All right. So finished up with about 50 pips or so net. Now, I say that, and I'm just wanting you to know, I close out for 50 pips, okay? Now, if I just look at my chart and I do nothing, if this keeps going lower and this keeps going lower, I'm going to forfeit profit, okay? Now, if I'm at 50 pips of profit and price goes up, well, obviously I'm happy I took profit right now. So I'm just going to walk away so I feel like it's not empty-handed, because my other plus 90, that was disappointing to have it right there, and then, a couple minutes later it's back to break even. So to get back that profit, I'm going to go ahead and take advantage of what I've got right here. All right. So I'll take it. I don't feel like it's empty-handed. There's still some more movement to keep an eye out for. So if you're in, break even or better is totally fine. If it holds, let's see if we get lucky on another push to the downside. So if you're, right here, Aussie dollar break even might get stopped out at break even. Euro dollar looks like we could get stopped out there at break even. Pound dollar, yeah. I don't know. Overall, it's like I'm happy. Just take the profit. This certainly isn't turned into long-term positions or anything. This is just to try to make some pips today for the hour. All right. So I'll call it what it is. We traded, we navigated, we made some pips. Could have been better. Certainly could have been way worse. Hawkish comments overall. Let's take a quick peek at the CME watch tool and see if this has changed at all, which I think it did. So there's our rate decision from today. February is looking at a 25 basis points hike. Okay. March, looking at another 25 basis points hike. May, no rate hike. June, no rate hike. No rate hike in July. Huh. So not much has changed. We're going to take a look at this tomorrow. Just because it's like, if it's the same. It's 50 points for today, 25 and 25, and then after March we essentially go into that Fed pause. So we'll see. But if Powell keeps saying restrictive and we're a long ways off and we don't want to do premature loosening and all that crap, it's like, well, then they're probably going to stay really firm on the language. Yep. So our focus is on shifting our policy stance to become more restrictive, not on rate cuts. I don't see us considering rate cuts until we're confident that inflation is declining to a sustained manner. Inflation will fall due to goods sector by the middle next year, housing, services, structural labor shortage. All right, so just reading some additional headlines. China faces a very difficult situation when it comes to reopening. It's hard to say how end of zero COVID policy in China will affect U.S. inflation. I mean, they're probably thrilled it's happening because it's suppressed oil prices big time. No rate cuts in September 2023. Reopening in China is unlikely to have a material impact. Okay. Good, Linda. Linda says 100 net pips using basket trade, dollar weakness. Okay, fantastic. Good stuff. Happy to hear it. All right. So, I mean, overall, how'd we do? Everyone all right? We walk away with a few pips if we're willing to take some trades. We had some opportunities. So I certainly feel a lot better about running a session like this where it's actually tradable. Yesterday felt like it was not tradable. You know, yesterday's CPI news was the first minute was ridiculously aggressive, and it was like you had to make a decision within that first 3 to 5 minutes to take a trade. So it felt more chasey. You know, we had to chase the market yesterday. Today we got to see the news just kind of come in, digest it, see some decent flow. And like I said, it's 3:01. So let's take a look at that DXY. What does it look like on the hour time frame? Okay, is that a convincing hour? Yes or no? Is that a convincing hour candle? No, it's not. Right? Awesome. 180 pips, great. Good stuff. So yeah, this is pretty terrible, right? I mean, there's your high, there's your low, price is in the middle, and now we figure out what's next. So if there's a breakout to the downside, there is more dollar weakness that's available. I said we can get to 103 on Monday. If we trade inside of this for tomorrow, then we'll see, you know, we still have this daily pivot from today. We still have a pocket from yesterday's CPI news. So, you know, the dollar might get a little bit stronger as it digests this commentary from Powell. Okay. All right, everybody. So thanks for coming in. Thanks for tuning in. Tomorrow is going to be a busy day. We're starting the flex room nice and early. Let me take a look at the calendar here. So tomorrow we have tons of news. We have the Swiss National Bank rate decision at 3:30 a.m. Eastern time with a press conference. I'm not trading that live, but I do see here that the market expects a 50 basis points hike from the Swiss National Bank. 7 a.m. we're going to start our session. So 7 a.m. Eastern time, we will start the flex trading room. That's going to be 5 a.m. for me out here in Utah, but we'll start the session at 7 a.m. Eastern time. We'll look and see if the pound gives us some decent volatility. And then we have our ECB rate decision at 8:15, 8:30, and the press conference at 8:45. So essentially, we're going to be live from like 7 to 10 tomorrow. We're going to take a break in between. If we have some decent trades running on pound crosses and break-even stop losses or trailing stop losses, we'll take a breather, you know, get some coffee, stretch the legs, come back and grind it out for the ECB. Okay, but that'll be tomorrow in the Smart Trader trading room. So tune in, smarttrader.com, go to the Flex trading room. We'll start there at 7 a.m. Eastern time. So pound, euro tomorrow. Good stuff. All right, very good. And yeah, I'll see you all tomorrow in the trading room. Thanks for being with me today. On Friday, we'll be back to the Pulver Report to wrap things up at 9 a.m. Eastern time, possibly 9 a.m. I might be playing some basketball in the morning, which is like 5:30 a.m. Mountain time. So if that's the case, I might push the YouTube session to like 9:30. but I'll let everybody know if that's the case, and I'll schedule that on the channel. Okay, but thanks for being with me today. Glad we didn't walk away empty-handed. Good work making some pips. I always love to see that, and I'll see you tomorrow. Thanks, everybody. Bye.